What's up, traders? In the interest of consistency, I want to publish this video as an update on what the Nasdaq is doing and why it's at a key resistance right now in this recent rally. This rally that we've seen in the stock market has been a pullback to the stock market correction that we've been in for quarter one of 2022. Yes, I do believe that this is a stock market correction, not the start of a big crash like a lot of people want you to believe. I've been hearing a lot of talks of imminent recession over the last few weeks, but no one can really show me the data to demonstrate that we are experiencing or about to experience two consecutive quarters of GDP decline. That's the definition of a recession. Right now, unemployment is very low. There is a lot of economic activity. And so I don't really know why people think that there's going to be a recession other than what the media is putting out there to scare people, to amplify that general state of unease that is associated with the market not making all-time highs every month like we had in 2021. And even in 2021, there's a tremendous amount of FUD. Well, this first quarter, we finally got the comeuppance, the pandemic pullback or the pandemic round trip from the up and to the right action of 2021. In the grand scheme of things, if you look back to COVID, this is not really that bad. It is a standard pullback, a standard correction. Every other year, you get one of 10 to 20%. I do believe that's what we have just entered into, and it is now recovering. And I'm going to do a little bit of history to show over the last few weeks what has informed that decision, and that thesis has not changed. But to the price action at hand, right now from the January the 4th, 2020 high, that's going to be the December 28th, before this pullback occurred, down to the low that is set on March the 15th, price is now pulled back to the 50% retracement level. The 50% is on the Nasdaq index. I'm using the Nasdaq futures right here, is 14,800. And that is the key level that I'm watching right now today on March the 28th, 2022, to see if it holds or breaks. There's some interesting price action that happened this morning in the morning session where you had a high that was set on Friday before the weekend, and then price tried to push above it here this morning, right before the open. And as we talk right here around lunchtime, it has gotten back inside this range. And so remember, this correction level, this 14,800 that I drew off the daily, well, you now see a potential, you could call that a double top. I like to look for false breakouts, and I see this morning opening bar as a attempt to push higher, but now seems to be failing. And so it's starting to show confirmation of this being an actual resistance level. Now, anything can happen, but this is the first sign that this crazy bullish rally, 1, 2, 3, 4, almost 5, 6 days of bullish action that we've seen over the last 2 weeks are starting to slow down. And you can see that in the price movements. Price is beginning to sort of stall out. This was something I noticed in my weekly video yesterday, that the S&P 500 also did something very similar. It had a 50% pullback, which it started to stall out on last week. Monday, it really held. It broke above it, came back, pulled back to hold it, this level being about 44.54 on the ES, the S&P 500 futures, only to push above it. So the S&P 500 is telling us that it wants to break its resistance, whereas the Nasdaq, the more volatile of the two indexes, are telling us it wants to hold. There's a slight divergence there, but it makes sense to me because overall, I do believe that we are recovering from this correction. And I'll go ahead and say it now. We're going to make a new all-time high this year. The timing of it, don't hold me to it, but it's probably going to be in a few weeks or months. I know that may be contrarian to a lot of the contrarians out there, but that is what the price action is telling me. And I've been talking about this for several weeks now, trying to make videos to really key people in on what matters. What matters is not these experts on CNBC that want to sell fear. What matters is looking at the price action of the stock market indexes themselves, as well as the VIX volatility index. This trade, as it were, really began on the Russian invasion of Ukraine, which was what took us down for a dip on February the 24th. This is the Nasdaq we're looking at. Here is that invasion on the 24th of February. That brought us down to make a new low in this correction. Let's just go back in time here using TradingView. This was key. I use two fundamental principles when I'm trading. One is 50% retracements. The other is false breakouts. I don't think anything's more powerful than a false breakout because it gets everyone thinking one way. And if it snaps back the other, a lot of people are trapped. And so, psychologically, using market psychology is one of the most powerful techniques that I use. And so, this break of the January 24th low, which was caused by interest rate fears, interest rate goes up, less money goes in the stock market, blah, blah, blah. That's the story. If we just look at price, we can see that though we broke down below that level, in the same day, the market closed back inside this range. That was really, really key. And for me, that set up a bullish trade. What I like about it is that you know where your stop needs to be. You know that your stop needs to be just below that low that it made on February the 24th. And so if I was going to set up a trade in any instrument, whether it's the index or an individual stock or cryptocurrency, whatever, I look at that as a way to define risk. In other words, if we break the February the 24th low, then I know that I'm wrong. I know that we are going through that crash that everyone's talking about. But unless that happens, I'm going to be bullish. And the market did what the market wants to do, which is play games. And then on the March the 15th, it played its game, but never actually triggered that stop on the NASDAQ. It never actually told me, okay, this is a confirmed breakout. Played some games, but did not follow through. And when it failed, again, made a lower low, but didn't really sustain it. That March the 15th bar closed back inside the range and created this reversal that was very, very violent. And that's what happens when you have these false breakouts. People get to thinking that, oh no, the market's going to crash, and it doesn't. Now they have to cover their short positions. Well, at some point, as we all know, if we've been trading for more than a week, the market has to pull back. And so now we finally come to a resistance level, but the bullish trade is still on. The key thing to look at in the market right now is the VIX volatility index. I made a lot of videos about this, try to get this message out to people as much as I can, because I think this is the best indicator to use when trying to time the stock market. The key thing that happened in the VIX was you had the January the 24th low, which brought the VIX up to, let's call it about 39 almost. But then the Ukraine invasion on February the 24th actually made a lower high. In other words, there was less implied volatility, less fear in the market. That was not what you would see if the market was going to continue lower. You would have seen more elevated volatility. You would have seen more fear in the market. You would have seen a higher VIX. You did not. You saw a lower VIX, even though the market made a lower low. This told you this was going to happen. I know that's a kind of a little bit of tea leaf reading thing, but no. Study the VIX, or just, you know, I've done this for many years now, studying the VIX. It is a very powerful tool. And now the VIX is probably going to start its move down back into normal VIX territory, which is in the teens. I would expect somewhere in here to see a bit of a pullback. And I'm going to be watching for that. I'm going to be watching for the VIX to do a little pullback, but not really get into dangerous territory to tell us that this pullback is actually a continuation of the bear trend. So let's bring that back up. I want people to be watching. I want people to be watching this for a potential pullback off this resistance level now that we have some price action to tell us that price is respecting it. The S&P 500 is probably going to pull back as well. To express this thesis, I actually took a bearish position, a little small bearish position on Twitter today because it was a good setup following through Friday. It's a tech company, it's inside the Nasdaq. We'll see if that works to hedge my long side exposure. As this pulls back, I want everyone to be very disciplined and ignore CNBC talking about how this was the dead cat bounce or whatever. I truly believe, I am operating with conviction, that the best entries for the year 2022 probably occurred on the Russian invasion, the February the 24th, and then the first few weeks of March. If you did not get any stocks or get any positions long during those points, it's very possible that you'll be buying them at higher prices as the year goes on. You needed to buy when everyone was worried that World War III was coming. That was the best time. Now we're going to get a potential pullback to this rally that we've seen. And this could be your second opportunity. It won't be as good as those lows where everyone was panicking, but look in stocks that you want to own long term and try to find opportunity as the market does a natural, healthy pullback to this recent rally. So that's my message to people to help them trade wisely. We'll see you in the next video.